kickoff. Okay. Yeah, hello guys, good evening. Glad to have everyone here, and I'm sure we are all ready to, learn one or two from the conversation tonight. So it's going to be more like a conversation, because I discovered that the subject matter we're about to talk about is becoming very important in these times that we have right now, which is we're looking at the Federal Reserve balance sheet and stock market versus the crypto market. So before I share my screen and walk you through the Federal Reserve balance sheet and what I think, because of course I'll be sharing some of my personal opinion in correlation to some to the economic to the macroeconomic environment, okay, and then to see the possible trajectory and what we expect, the market to do at this time, and why we are going to see such a reaction if some certain conditions are put in place, okay, and that is part of what we will be looking into today. Now we're talking about the federal balance sheet, the Federal Reserve balance sheet, the stock market, and the crypto market. So in the past years, in 2017, when the crypto market, started booming, okay, in 2017, the total market value was around $620 billion. That's the total market value of the crypto market. It was insignificant compared to the stock market, compared to the forex market, right? But as at 2021, late last year, the market value of the crypto market hit 3 trillion from 2017 at $620 billion to $3 trillion in 2021. Okay. Now, something happened lately. The market dropped and it lost 1 trillion. Now, that's a lot already. Now, we want to connect how the economy, the macroeconomic environment has influenced the crypto market. Okay. Now, one thing we need to understand also is that money is moving from one market to the other. Is one thing they call it. Let me see if I could. They call it the contagion effect. The contagion effect. Now, the contagion effect is that effect whereby investors are looking for the best possible place to put their money, right? So when they see that the stock market is not is not, sorry, the bond market is not favorable, and the stock market is moving up, what do? They move to the stock market. Now, the contagion effect is now one thing that is affecting the crypto market now, right? Because right now, the crypto market is now moving in almost the same direction with most of the major stock exchanges in the world, right? Now, we look at the S&P 500 index, the same direction that the S&P 500 is heading to is the same direction that Bitcoin is heading to. And I tell you, if Bitcoin is the how do I put it now? Is the like the key indicators you look at. You must consider the price of Bitcoin and its movement when also analyzing other assets, other tokens, other cryptos, right? You cannot just analyze one crypto independently without considering if Bitcoin is strong or not. Now, if Bitcoin is not strong, right, it will impact other cryptos. It's either it will slow their growth or it will make them fall drastically. Now, we want to consider how the stock market is now correlating with the crypto market. What should we look out for? Now, many of us experienced the period of the COVID pandemic in 2020. Now, and at this period, because the pandemic came at a period where no one expected it, okay, and there was lockdown everywhere, which is there is a reduction in production, right? A reduction in production, but consumption was still going to be, people were still going to eat. Yes, people are still going to need certain things. You understand? Demand was high, supply was low. Now, the government came to the rescue. Did you know that 2020 and 2021 was the year that almost the governments of the world printed the highest number of fiat currency? It was this period. Now imagine there is already some volume of money in circulation, right? Before the pandemic. Now imagine when more money were now being printed and pumped into the economy. That is, the new money will now come and join the old money that are already in circulation. Right? Now, when new money is entering into the market, now, of course, somebody just give you $1K, $2K, right? Out of the blues. You did not work for it. Okay? Now, you will discover that this inflow of new money actually reflected in the stock market. Reason being, people now what? Even when they spend more, right, and also invested. And that is why you will discover that in 2020 and 2021, you will discover that billionaires became more billionaires, right? If you look into the world's trajectory of the Elon Musk, the Jeff Bezos, the what is his name? Microsoft and the likes, you will discover that they became more and more richer. The reason is because at that period when new money was coming into the economy, they were at the supply side supplying, what is it called? Still producing, right? They were still producing goods, they were still selling. So money was flowing. The money that was flowing into the economy, the free money, the new money that were flowing into the economy, were going to them, right? And also going to those who are selling things. Because when there is more money in the economy, spending would increase, right? people would want to spend more. Now, you will also discover that during the pandemic, the countries of the world, especially the United States, had to start reducing their interest rate. Right? Why are they reducing interest rate? Now, let me tell you something about interest rate. Interest rate tells us the cost of money. Interest rate is what? Is the cost of money. How much you are paying, right? Interest rates are the price of money. So now, if there is high interest rate, which means you will be paying more for money. Do you know what I'm saying now? But when interest rate is low, right, with little amount of money, you can buy more goods. I don't know if you get my point. With little amount of money, you can still buy more goods, right? Now, so that there can be, so that the economy can become a bit robust and not, there won't be a kind of a crackdown. The government started applying what we call quantitative easing. Now, this quantitative easing is to allow more supply of money in the economy by reducing interest rates. Now, by reducing interest rate, what will happen? When you reduce interest rate, you discourage investment, you encourage consumption. I don't know if you get my point. You discourage investment and you encourage consumption. So people will now have more money to buy things, to spend more. So there will be more money in circulation. Right? So now, when there is more money in circulation, but pursuing fewer commodities, what do you expect to happen to price? Who can tell me? When there is more money in circulation, pursuing fewer commodities, what do you expect to happen to price? I need somebody to answer. What do you expect that will happen to price when there is more money in circulation pursuing fewer commodities? Now, everybody have money to spend.
Price will go up.
That's it. Price will go up. Price will go up. So we discovered that each time people take $100 bill to the supermarket or to the grocery store to buy stuffs, right? They would only, at every month on month, they are only able to buy less and less of grocery store with that same $100 bill. I don't know if you get my point. So what I'm saying is this: when there was more money in circulation, people had more money to spend. Now interest rate was being reduced, right, to give room for increase in the supply and circulation of money. Right? Now, this now made price to slowly accelerate, which leads to inflation. Right? Now, people going to the grocery store with a $100 bill are only able to buy less and less of what they were able to buy the previous month. I don't know if my English is correct. I don't know if you get what I'm saying there. If you understand what I'm saying there, let me know in the comment section, so I'll know if I should come again. So which means if someone was able to buy 5 stuffs before in 1 month, the next month with that same amount of money, the person won't be able to buy that 5 stuffs again. The person will only be able to buy less of that thing. Why? Because price keeps increasing. Now, so why the government is trying to save the economy, why the Federal Reserve is trying to save the economy, right? There is also a downside. There is also a downside. And we can see that has impacted the stock market a lot, because during that time when they were giving free money, right? All American citizens were entitled to so and so amount of money. Then those in the Europe were entitled to I think 2,000 euro or 1,000 euro at the time, where every registered citizen gets free money from the government. Now, these free money that are entering into the economy, the question is, where are they going to? Right? So when they become when there is more money in circulation like that, it dries up price. It dries up price, right? Because there will now be more money pursuing fewer commodities. And when price is being driven up like that, it creates inflation. Now, this money that were also being given to the people were also pumped especially into the crypto market at the time. Right? More persons were now, since they had free cash, were now buying stocks, were buying crypto. Now we see the chart. Let me see if I can share my screen, so that I would from there explain. Okay. Coming. Okay. Trying to see. Can you see my screen? If you can see my screen, let me know in the comment section. If you can see my screen, let me know in the comment section. Okay, great. Great. Now, so if you look at it, this chart shows year on year of the Fed balance sheet, right? The Fed balance sheet. Now, let me give a little explanation of how the Fed operates, right? How the Fed operates, and of course, it's almost replica of how the central banks of the world operates, right? Now, the central bank the central bank has a reserve, right, where all banks of the United States would have to make a certain deposit with the Federal Reserve, right? Now, when there is time when the economy seems to be contracting, right? Now, the Fed, we want to come in to create an expansion, right? That is when there is when the supply of money is low in the economy. Now, what the Fed will do is they will just reach out to every bank, like they will purchase some assets from every bank, from the banks, right? By purchasing those assets from the bank, they are giving out more money, right? Now, when they want to, when the economy is now when the economy has expanded, right, and they want to control it, they want to contract it, right? Now, they stop buying assets, right? They stop buying assets. The moment they stop buying assets, which means more money that used to enter the economy will stop entering the economy, right? Now, if those new money that were always entering the economy, when the Fed buys up assets, that's what we call quantitative easing. It's sort of quantitative easing. Okay. Now, when they stop buying assets, it's a signal. Now, the supply of money will reduce. Okay. The supply of money would reduce. Now, these are techniques via which the central banks use in controlling the supply of money in the economy. Now, so this is year on year, where we have data from 2008 to 2002. Now, if you look at this curve from here, we could see that there were a lot of economic activities and crises that happened at this period, where we see so much of downward slope and then a little bit peak and then some rough edges, the likes like that, But I want to put us through the recent happenings, right? Now, we could see how the curve moved from here. Okay? Now, this is 2014, this is 2013 to 2014. We saw what happened here. Now, if you see what happened here, the curve was flat, right? The curve went flat at this period. Now, and then it started decelerating. Now, this was what? 2019. August 12, 2019. The curve was decelerating, right? At this point, if inflation rate was very low. Right now, US inflation rate is 7 point something percent. That is ridiculous, right? And it jumped from 1 point something percent. It jumped from 1 point something percent to 7 point something percent in a very short period of time. Now, from my research, I discovered that I think I wrote something about it on my Twitter handle. I discovered that according to Fed study themselves, right? Now, that according to Federal Reserve study, 40%, I'm talking about like the inflation rate jumped from 1% to 7% within the space of 2019 to 2022. Now, when you see that when the curve peaked a bit to this point in 2020, and that was when COVID set in around March. If you can see very well, COVID set in around March, where I put this cursor. Now, and lockdown everywhere. Lockdown, government had to start thinking about a way out. People are not going to work. Some persons have been laid off from work. Some are being told to work from home. Some workers are not going to work again. Production has decreased, right? What should we do? Stimulus. What should we do? Stimulus. And what happened? They started printing money. Now, like I said earlier, the money that has been printed, right? That was printed in between 2020 and 2022 have never been printed before. Like I used to say, now the number of physical cash that was printed has never been printed before like that in history. But more money was printed and was pumped into the economy. Now, watch what happened. What happened to the curve? What happened to the curve? If you can see it, let me know in the comment section. What happened to the curve? What happened to the curve from 2020 up to this? What happened? What happened? What happened? Is somebody typing? What happened to the curve from the period of the COVID pandemic? Yeah, we can see the upward spike. Yes, you can imagine. It never happened before. Look at it from 2008 to 2019. We had a fair curve. But look at something strange happened in this place. This is a bubble. This is a bubble. And what happens to bubble? Bubble will burst. Bubble will burst. Right? Now, there is so much concern in the air. There is so much fear, in the heart of investors who are heavily invested, in stocks, in crypto. now that crypto is now correlating with these assets, right? You could see the pump up here. Now, what will happen? Now, more money has now been pumped. More money was printed. Interest rate was reduced. These are quantitative easing. More money was printed. Interest rate was reduced. Okay? People were spending, putting their money in stocks, putting their money in crypto. It's free money, of course. New money entering into the economy. But the question is, where are this new money going? Where are this new money going? Now we now have the curve at this level. And the highest interest rate, after a very long period of time, highest interest rate ever, 7% Now, the Fed it's not sustainable, right? It's not sustainable. Okay? Now, of course, this high interest rate is like an added advantage to the bond market. Do you get it? We're not talking about the bond market here now. Now, the Fed wants to do something. So, by tomorrow, the Fed will be releasing a news. I think I shared it. The Fed will be releasing a news on interest rate decision, macroeconomic policy, and also be having a press conference. Now, all years would be open to looking at what the Fed will do. Now, here are what economists are saying, because number one, the Fed would have to control interest rates, right? Now, there is just the Fed has no option than to actually, increase interest rate. They have no option than to increase interest rate. Okay? Now, by increasing interest rates, you would discourage you will be able to mop up money away from the economy, because more persons will be encouraged to invest than just to spend. Okay? Now, when interest rate is being increased, that might slow down inflation. So what we might most likely see when interest rate is being increased is that it might not be, because what the Fed is doing right now, they are trying to see how markets would react, so that they would now position themselves on how best to increase interest rate. Because some economists have forecasted that Fed would most likely increase interest rate 3 to 4 times, right? 3 to 4 times, which means they would have to increase interest rate on 3 to 4 different occasions, right? So as to slow down inflation. Okay. Now, of course, market is already reacting. So there's a term for what the Federal Reserve is doing. They call it forward guidance. Now, forward guidance is that the Fed do it intentionally. Okay, they might just call New York Times, right, and say, tell the public that we are thinking of increasing interest rates. Tell the public that we are thinking of reducing interest rates, right? And then the news is being brought out by New York Times or something. It won't be like the Fed will now come out and say, "Oh, we said this." No, it will create a lot of things in the market. So that forward guidance now would give the Fed a signal of market expectation, right? Then they will now know how to release the interest rate. They will have to increase it slowly or to increase it at once. You get? But they also want to be very sensitive to how the market would react, so as not to destroy the economy, so as not to crash the market. Okay, now this is what the Fed would most likely do. They would most likely increase the interest rate, right, over a consecutive three times, right, to 4 times. Now, and when this is being done, the stock market would react to it by a massive sell-off, right? A massive sell-off, because now there is now how do I put it now? There's now a slowdown in the entry of new money, right? And the Fed is now taking on the alternative of quantitative easing, which is quantitative tightening, to see how to, contrast things to reduce inflation and money supply. Okay, so they want to soak out money from the economy. By doing that, their direct target is inflation, but these are the mechanisms that must be put in place for inflation to be controlled, right? So these are what we are looking out for in the macroeconomic environment, and this would have an impact on the stock market and also an impact on the cryptocurrency market. So I came across a chart. Let me see if I could just talk about this, and then we round up and have some general discussion for those who have questions. Okay, let me see. Yes, I think I read something on IMF about, some of you might need this link because you need to read it, because information is key. Information is key. This time around, if you ever want to make money from the economy, you have to follow the news, right? You have to follow fundamentals. You have to, so that you keep yourself informed of where money is going, right? You cannot just, because you cannot just wake up and say, Alpha, which coin make I buy, which stock make I buy. No, you cannot just wake up to just start hinging your investment or your choice of stock on someone else's decision. You also need to equip yourself with informations, right, that will help you understand the market very well. I have sent the link to the group. You might want to read it, but I just want to talk about this correlation now. Okay. Now, there is, in this article, it was stated here, said, for instance, returns on, okay, I want to, okay, good. Returns on Bitcoin did not move in a particular direction with the S&P 500 benchmark stock index for the United States in 2017 to 2019. That's to tell you that Bitcoin and S&P 500 were not correlating, right? They were inversely related. They were moving in opposite direction. They were not moving together, right? That's between 2017 and 2019. That was when the market cap of Bitcoin was still very small, right? The market cap of the crypto market was still very small compared to now, where in 2017 we were having 600 and something billion, and now we are having something trillion. If you know the margin between that billion and that trillion, you will know that it's not there was something happened and it jumped up, and those things happened in 2020 to 2021. So you could look at it when there is such a sudden bubble, then we know that there is danger in the air. There is danger in the air. Okay, it's not to create panic, but it's to create caution. Okay, it's to create caution. Now, the correlation coefficient of their daily movement was just 0.01. Now, the correlation coefficient of the movement of the Bitcoin and S&P 500 was 0.01. They were far apart, right? But that measure jumped to 0.36 for 2020 to 2021 as the assets moved more in locksteps, rising together or falling together. So this is a diagram that shows the correlation, right, of the movement. This is Bitcoin. This light blue is Bitcoin, and then this is S&P 500. Okay, so in recent times we could see how they've been moving, right? How they've been moving in recent times. We see how they've been moving here. Okay, this also shows the correlation between Bitcoin returns and S&P 500 returns. If you look at this period, but if you compare it to this period now, you will see the difference. You will see the difference here, that there is more correlation at this level, right? There is more correlations at this level. So there is more correlation at that level. So these are the things we are looking at, in the market right now. So these are the things we are looking at in the market right now. So I just felt, okay, now I need to just share these things with us, call our attentions to it, so that we would not just start engaging with the market from I don't mean to say ignorant perspective, but then so that we can know what we are doing, we know what to expect. Was it not last 2 months around November, right? For those who follow the news, Elon Musk sold close to 7 billion worth of his shares. People were asking why, not knowing that they already know what is coming. They know what is coming, right? Now, the smart people would actually, having understand the movement of the market, would actually pull off some funds or cut their portfolio into two, divide it into two, and pull out at the top and buy at the bottom, right? We don't know when the dip would end until there is nobody interested in buying. Then the market will start rising. It's funny, right? And that's how the market moves. When there is nobody interested in buying, the market will start rising. Why? Because those who have sold at the peak have found an interesting price to get into the market. So right now we are seeing the market, with the Bitcoin market trying to peak. I think the last time I checked it was at 37. So that might be a bull trap, because the sentiment, the rumors, they are not over yet. Now, let me tell you something. The crypto market is also exposed. Okay, it's at 37K now. Okay, the crypto market, but I see this as a bull trap now, because some persons who want to jump in now, and they might just be trapped. But who knows? Let's see where the market closes today. The crypto market is actually exposed to certain risk, in which I've noted them. I'll be sharing with you here. Number one is geographical risk. Now, we can see, because we are still at the embryonic stage of the crypto market, right? We saw China ban Bitcoin mining, and then what happened? Market started reacting. Geographical risk, right? Why? They don't want Bitcoin miners in their location again, and then market reacted. Sell-offs happened. it was almost like the end. It was almost like, we saw the liquidation in the market. So that exposure is still, the crypto market is so much exposed to that kind of risk, geographical risk. Number two, the crypto market is exposed to economic risk, like the one that is about to happen, because why we are looking at it, that the crypto market might react alongside with the stock market, is because they are now correlating. Okay, so the new money entering into the market that actually influenced the crypto market to move up, added more value to its market cap, because of course those money were coming from somewhere. They did not fall from heaven, right? So causing its market cap to increase. When quantitative tightening is now being put in place now, when those cash are being mopped out of the economy, the crypto market would not escape it. The crypto market would not also escape that economic risk, right? So the crypto market also reacts to economic risk. So that we can round up soon. Number three now is sentimental risk. Elon Musk, he just tweet. There was one recent tweet he did. I think he did this evening, where it was let me see if I could, if I could get it. It was like, if McDonald's would accept Doge as how do I put this in English now? If McDonald's would accept payment in Doge, would accept Doge as part of their payment system, it would do, I think it would do a food something for free or something, that alone, sentiment. You understand? Sentiment. Interestingly, in some big institutions, they have robots that actually tracks the tweets of key important persons, right? This robot actually tracks the tweets of key important persons, particularly Elon Musk, the Fed, the president of the US. He tracked their tweets. Now, these bots, a machine that was like algorithm that will be developed, to track, is it a negative news? Is it a positive news? What are the comments coming between, in between it? What are the keywords in the comment section? What are the keywords in the tweet? You get? And this bot will actually interpret it and convert it to, either trigger a buy or a sell-off, right? So this is sentiment. You get? The crypto market is exposed to sentiment, because it has not. But one thing I'm sure of is that it will not remain like that forever. Okay, the crypto market will get to a point where it will be so robust and able to stand on its own, right? Without being able to be influenced by one party or the other. Now, the crypto market right now is also exposed to regulatory risk. Okay, look at what is happening. Russia came up and started saying they're going to ban mining crypto or something. Russia did their own. Some other countries too did their own. India did their own, right? So these are regulatory risk, and regulatory risk even seems to be the one that creates more impact, more heat for the market. So we might be looking to see more regulatory, regulatory activities in the crypto market, right? Regulatory activities in the crypto market. And let's not forget about the regulatory risk. We need to watch out for that too. Now, I've explained this one from the beginning. I talked about the contagion risk. Now, the contagion risk now is the risk associated to the correlation of the stock market and the crypto market. You get? Which means what impacts the S&P 500 right now has a higher chance of impacting the crypto market, right? Because of the correlation that is the growing correlation between them, right? But one thing I also think, this is now in my opinion, in my opinion, is that this contagion risk and this correlation won't last forever, right? There will be a time where the both of them would have to start parting their ways again. Okay, we have to start parting their ways again once the crypto market finds a better footing. Okay, a better footing, probably more regulations and all. Now, so this is just what I want to discuss with us. So if you have any question, you can just let me know you have a question in the comment section so that I'll just answer one or two questions and then we'll round up. So is there any question?
Yes, I have a question.
Okay.
The, besides that, which you can use to make this analysis of Fed balance and all that, can we get it on group chat?
Okay, let me. There is one I do use to track, because number one, you might investing.com, okay, Bloomberg. Okay. You also want to follow Bloomberg Global News, Bloomberg Global News on YouTube, so that you can keep track of their updates. Some of these ones are paid actually. They are paid. Okay, let me show you guys. So you can use investing.com. In fact, investing.com has some good. Okay, so you could see what's going on right now. I think there is a war about to happen. There is a war about to happen, and the market will also react to that. The market will also react to that. US, UK, Europe are fighting Russia over Ukraine. Russia wants to invade Ukraine, and Europe, US, and UK are doing all their best possible to prevent that. Every one of them now have sent their men to go and man the borders. It's just a serious matter. If I want to follow up, so let's check out. So you could see this place comes to Bitcoin. Okay, let me first. This is economic calendar. You want to look at economic calendar? Let's open Bitcoin. I don't know why my network is slow. So yeah, let's wait for it so I can just show you what is really happening. What is really happening? Okay. So you can see at this point here you can see a lot of conversations going on Bitcoin. So you can come here and catch up with conversations. Like, look at other things. You want to read about them. You want to know what people are saying. You want to you come to the forum and know what people are saying about Bitcoin. Then this one, economic news. Someone helps you to follow up with economic news. Like tomorrow now, there are two key important news that will be coming out tomorrow. Two key important news. All hands are on deck. Let's look at tomorrow. Tomorrow. Sorry, I don't know why the network is this bad. Okay. Trying to see. Okay, tomorrow. Go to tomorrow now. Good. Awesome. Okay. Let's see. What can we filter here? Personally, I love to filter my own graph to only important stuffs so that okay, to filter data. Okay. I only want to see these ones. I only want to see the news with 3 stars. I don't know if you're getting me. Now, the stars on it shows how significant the news is. So if it is 3 stars, it shows you should not joke with it, right? If it is 2 star, it is less significant. So, but for me, I focus on the 3 stars only, right? The 3 stars. Now, what are the categories of news I want to look at? Is it the news from the central bank? Is it the news on bond? Is it the news on inflation? Is it the news on economic activities? Is it the news on employment? Is it the news on credit balance and all? So if I say select all, right? So I want to follow up with the news on everything here. Okay. Okay. Then I look at the country I'm focusing on. So I think just these few countries are okay. Now let me just save changes. Apply. Um, are we following? Can you see my screen?
Not yet.
Wow.
We didn't even get
Actually,
the parts where you trade the script. Can you drop the sites on the group chat so we can just follow up daily?
okay. Okay. Oh, I didn't know. Sorry about that. Let me drop this chat on this site of the group chat. So because if you really need to. Oh, sorry, I wasn't even looking at the chat. Sorry. Okay. Come. Take it out. Okay, can you see my screen now?
It was.
All right. Okay. Okay. So I went to filter, right? I went to filter insignificant news away, right? Because there are some news that are not significant. So as I clicked on filter, it brought me here. So you click on the selected countries you want to follow up with their news. If it's only US that you are looking to follow, or Europe, or China, you get, it depends. So I come here and click the category of news I want. Do I want to follow up on unemployment rate, anything that has to do with employment news? Then credit risk, credit rates, all those ones. Then balance, balance of trade, balance of payment. Then this news on economic activities, news by central bank, that's interest rates. Then inflation, bonds, confidence index. Okay, so I want to follow up on all. So I clicked on select all. Now, if you look at this place shows importance. Now, this one is 1 star, 2 star, 3 star. The one with 3 star, you should not joke with it, right? You should not joke with it. The one with 2 star, it's not as significant as the one with 3 star. Then the one with 1 star is less significant, right? But then it's significant too, but less significant. But I focus on only the one with 3 star because these are the ones that will definitely move the market. They will definitely move the market. So when you do that, you now click on apply, right? Click on apply, then you apply them. Now, don't forget, you want to follow up on a news of that will give you the right update. Now, you want to check, is this time correct? So you want to correct the time as well. You get to West African time. to West African time. Okay, West Africa. So to West African time. When you do that now, you wait for it, it loads. So you can see now, I'm now on the right time. Okay. Now, so this is for tomorrow. Now you see this news that is here. This one, and this one is no joke. It's very, very important. Very, very important. Right? So is gonna, if you want to, let's explore what it is inside each of them. One is interest rate. Some tells us what will be the decision of Fed tomorrow. You know, what will be their decision? Are they going to increase interest rate aggressively, or are they going to increase interest rate gradually? But interest rate cannot escape it. They will have to increase it. But are they going to be aggressive about it, or are they going to take it gradually? So this one now is the U.S. Open Market Committee. So this committee will be speaking on monetary policy, right? Monetary policy. You might want to go and read it up. You know, probably just want to understand it. You can watch YouTube videos on it. Those ones that you're using to watch Aki and Bobo. You can use it to just educate yourself, of course, because if you want to make serious money, even if you have a financial advisor, right, you also still want to be equipped, okay, so that at least you are not lost in this world now. They won't say, okay, this is what's happening in the stock market, where your money is, and you don't know what's going on. So you need to know, right? You need to know. You can read up on forums and all. You need to know. Okay. Yeah, I don't know if I've answered any question, or is there any other thing I've not answered. So these are places. This is a place you can get information about economic updates. Is there any other question? Let me check it. So is there any other question, or we can round up? Okay, so if we can round up, since there is no other question, tomorrow I am hosting a renowned economist on my Twitter space. Let me check if I still have that stuff. Okay. So I'm hosting a renowned economist on my Twitter space. This young man is an economist and is a macroeconomic strategist. All his predictions, all his outlook for 2021, all of them came to pass. All his macroeconomic outlooks, global, local, everything in details, came to pass, because of course I follow him very well, and he's a very close friend of mine. All his details on macroeconomic outlook for 2021, everything, the interest rate forecast, his inflation rate forecast, monetary policies forecast, everything. So now I want to engage him. Let's learn more. How do we spot these things? Because the current macroeconomic environment, there is so much noise, there is so much fear, there is so much uncertainty of what will actually happen. Will the market go bullish? Will the market go bearish? Even if it will go bearish, for how long? You get, what are those things that we are expecting? How best do we position ourselves? Okay, so tomorrow I'll be hosting him by 7 p.m. right? By 7 p.m. on my Twitter space. I will be dropping the flyer, and who is this asking for giveaway? You are yet to learn, young man. Giveaway. Okay. Let me fetch the link so that I can share with you guys, because we all must learn. Come on, please. Let me grab the link to share with us. You can also share with your friends, please. You can share with your friends. It's going to be an interactive session. It's going to be an interactive session, okay, and very educative, very educative. Okay, is one event I'll be having every Wednesday on my Twitter space, because actually I believe everybody needs to have this knowledge. Everybody needs to understand, and we'll be learning from experts. So tomorrow is one. You want to join us tomorrow, 7 p.m. No African time. We kick off. The link has been sent to you. You can set your calendar. Add it to your calendar. Get reminder. Join us tomorrow and get more knowledge on how best to position yourself in the crypto market and in the macroeconomic environment, and make more money, because that's the goal, right? That is the goal. Okay. Thank you very much. If you got value from this presentation, if you got value from tonight our session, please, you can just let me know in the comment section. I got value, I got value. This would actually, I encourage what we are doing. You know what I'm saying now? What we are doing in FinSmart to give more value. To give more value. That's the goal. That's the goal. Okay. Thank you very much. Thank you very much. Okay. All right. I would like to bring this session to an end. I appreciate everyone that joined the call. I look forward to seeing you tomorrow at the Twitter space to learn from the best. Thank you.